keep you updated on the capital and financial markets. Here is a recap of what happened. The Securities Commission said it has allocated 30 million ringgit from the Capital Market Development Fund for graduate training in the capital market sector over the next 3 years. SC Chairman Datuk Seri Dr. Awang Adik Hussein said that the allocation was part of its capital market graduate program to mitigate the talent deficit within and increase graduate employability. The CMGP is a collaboration between capital market institutions and Malaysian universities, which prepares graduates for the capital market sector, he said during the launch of Invested in Kuala Lumpur on the 19th of June. He noted that one of the challenges of the capital market sector is the lack of skilled labor in critical positions. The Philippines securities regulator has pushed back the launch of a digital asset framework after the collapse of cryptocurrency exchange FTX because it does not want people to get burned, the Philstar Global newspaper reports, quoting Emilio Aquino, head of the regulator. He says the Securities and Exchange Commission Philippines had planned to launch the framework in 2022. We were supposed to bring it out late last year, but we don't want people to get burned. The issuance of digital assets as a form of capital raising, we have to study that because like in FTX they were transferring billions left and right, Aquino, chairperson of the SEC, says in an interview with Philstar Global published on the 16th of June. Malaysia's new investment fund launches fell almost 1/3 last year from 2021, underscoring investor caution about inflation and interest rate hikes. Figures from the Federation of Investment Managers Malaysia's 2022 annual report show that 227 new funds were launched last year, 31.6% fewer than the 332 in 2021. Assets under management by the group's members dropped over 6% to 608.36 billion ringgit from 648.04 billion ringgit in 2021. Malaysia is considering policies to attract family offices and promote corporate venture capital in a bid to make its capital market more attractive to both foreign and domestic investors. More immediately, the local bourse, Bursa Malaysia, will slightly reduce the stamp duty on transactions and, together with Securities Commission Malaysia, implement reforms to make listings easier and faster by expediting the initial public offering process. The measures were announced by Prime Minister Anwar Ibrahim at the launch of the SC's Capital Market Graduate Programme. In its latest move to fight scammers, the banking industry has introduced several safety measures including delaying the movement of abnormal funds by 12 hours. Public Bank introduced the half-day cooling-off transfer period, which would allow people who have been scammed to stop their funds from being moved out. The new policy came into effect from yesterday. In a statement to customers, it said it was introducing the transaction cooling-off period for abnormal transfers. A cooling-off period is a precautionary measure that allows banks to review and assess transactions that display characteristics of abnormal behavior. This additional step was proposed by Bank Negara Malaysia and is designed to minimize the risk of unauthorized transactions and potential fraudulent activities, ensuring the safety of customers' funds. FIMM is pleased to announce the release of its annual report 2022 with the theme, "In the Grand Scheme of Things." Visit FIMM's official website to download a digital copy. The latest e-zine is now available for download at FIMM's official website. This edition features articles on the usage of social media for investment marketing, an introduction to vulnerable investors as well as the recent Global Money Week. Download your copy today and stay informed about the latest developments in the industry. This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.